Looking at the extreme volatility in commodity prices since May 2006, and again since the beginning of this year, plenty of traders are wondering if the commodities bull market that began in 2001 is about to turn into a bear. But do lower prices simply represent a short-term correction and a long-term bullish trend that analysts are calling the commodity supercycle? Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. Now, supercycles are decades-long upswings in real commodity prices that are driven by the urbanization and industrialization of major economies, in this case, the growth in China and more recently India. Of course, commodity markets have always been strongly influenced by speculation. Hedge funds, pension funds, and an increasing number of retail investors have piled into commodities, causing what many analysts consider a bubble in metal and commodity prices, and of course in mining stocks. My guest today is Christian DeHaemer, founder of the Special Situations Report GRESSOR and strategic consultant to successful information services such as Death Cross Trader and Breakaway Investor. Welcome, Chris.
Well, thank you, Laura.
So what's up with the commodities market, especially metals?
Well, as you know, commodities markets have been in a secular bull market here for the last 5 years. Metals markets, uranium, tin, copper, nickel, have all been flying. Many mining stocks are up more than 1,000%. So we've been in a huge bull market, and up until about 3 weeks ago.
Now, the most useful indicator of a supercycle is the high and rising intensity of metals use. In China, intensity of use is 3 times that of the U.S., and it's one of the few segments in which demand is driven by domestic rather than exports. Do you think this trend will continue? And if so, what metals will continue to rise?
Well, steel, China is now the #1 steel producer in the world, and the steel growth there is phenomenal, and as well as other metals. This is the basic need for China's population: housing, electricity, roadways, natural gas pipelines, everything you need for a booming economy. China's been growing 10% a year since 1978, and I don't see any reason why they're not going to continue to grow. I mean, they came off a low base, but they're still at like $3,000 per capita, and so they got a long way to go, and that demand is just going to suck up basic materials.
Well, let's talk about nickel for a moment. Speaking on the global level, with rumors that Russia is about to renationalize Norilsk nickel, how is that going to affect nickel prices?
Well, the Putin and Kremlin wants to have a monopoly on all its natural resources and has used those as political weapons in the past. So what you have is, if Norilsk Nickel, one of the big 4 nickel producers, continues to buy up nickel producers and they're nationalized, you could see the Putin Kremlin, or the Kremlin following Putin, continually to use nickel as a political weapon, hold back supplies, ramp up the prices of nickel. And it's interesting to know that nickel's used in natural gas pipelines, used in the valves, because it doesn't corrode like steel. Nickel's used it's 10% of all stainless steel. So stainless steel is used in valves. And Russia's now building some 50,000 miles of natural gas pipeline going from Siberia to England. So obviously they're going to suck up a lot of nickel.
So what other supercycle metals are you watching?
Well, supercycle metals are nickel, copper, tin, uranium's a big one.
And do you have any suggestions for us?
Well, I have a number of specific buy recommendations in uranium, tin, copper. I got one today. It's called Capstone Mining. It's a Canadian miner of copper with some byproducts. They're a $100 million company. CS, trade in Toronto. Don't get them confused with Capstone Mining, or Credit Suisse, which trades in the U.S. under CS. But what they have is they have a cost structure of 47 cents a pound getting copper out of the ground. Right now, copper trades at $2.65, down from $4. There was a bubble 3 or 4 months ago. So what this represents is a pretty good buying opportunity. They have their price structure is going to drop from 47 cents down to 41 cents. And also, they went from losing last quarter to making money this quarter, which turns them into a profitable company, which shows up on a lot of screens if you're looking for EPS, PE growth, things like that. They're growing at 100%. They're going to get some new permits. that's going to double their production next year. They look like a great buy.
Well, thank you so much for the recommendation. Sounds great.
Oh, thank you, Laura.
That's all the time we have today. Please tune in next week for another profitable opportunity on TFN's Smart Trading Action Alert. For TaipanFinancialNews.com, I'm Laura Cadden.
Nuclear energy is enjoying a comeback. No surprise that the price of another supercycle commodity, uranium, has soared more than 1,100%. The few uranium suppliers have their customers over a barrel, and they're willing to hold out when negotiating. It's not going to improve anytime soon. There are now 400 exploration and production companies, but the largest uranium resources in the world have barely been tapped. My colleague Andrew Mickey has prepared a special research report on uranium I urge you to read right now. Just click at the bottom of this video to get his analysis, or cut and paste the link we provide in the text summary into your browser. For TaipanFinancialNews.com, I'm J. Christoph Amberger.